what should be done about the skyrocketing oil price? So here is an article from the FT. The CME warns, the head of the CME has warned the Trump administration it risks a quote-unquote biblical disaster if it attempts to lower oil prices by intervening in derivatives markets during the war with Iran. Many people have called the government to intervene. What do you think?
I think, this is stupidity on stilts. Sure, the U.S. government can do things in the futures market to suppress the price of oil. But the way an economy runs is you need price signals. You need to know what things really cost. And if the government elevates or depresses prices, it gives false signals to the economy, the businessmen, and it results in a bigger economic disaster to cover things up in the short term politically. And as most of the production in the Gulf stays offline and tankers are afraid to go through the straits because it's dangerous, oil prices could go a lot higher. And as the U.S. government keeps printing up trillions of new dollars, even gold could go higher. Although I hasten to say, gold is now trading at more than it should be by historical levels, by comparison to a house or a car or a suit of clothes. It's now above where it should be historically, but that doesn't mean it couldn't go to $10,000 an ounce or more, because who wants to hold the dollar? The dollar is a hot potato. And not just because it's losing value and will lose value much more quickly in the future, but look, this is what BRICS was all about. They don't want the fiat currency of a bankrupt government. So what are you going to use instead of the dollar? Nobody wants to use the ruble or yuan either. That's why gold has gone up. It's the only financial asset that's not simultaneously somebody else's liability. And I've been a big gold buyer for, 50 years. But what I've really done that's been good is speculate. I don't say invest in small gold mining stocks. I mean, look, there's a friend of mine here in Argentina, and I meet him socially. And it turned out that he's a big shareholder in a small mining company. It's trading at 5 cents a share in Vancouver. I looked at it. Now it's trading at $1. Well, I bought it too. But this has happened all over with these small mining stocks at this point. I don't know. I don't know if they're going higher at the moment. They've had a really good run. But the fact is, and you can contradict me if I'm wrong, because you're on the ground in Vancouver, David, but I don't think the retail public is involved at all, basically, in the mining stocks or even the small oil stocks. It's just the cognoscenti that have been buying these things so far. The broad public has not. Am I right? Am I reading this correctly?
I can't comment on exactly whether or not the shareholder structures of all these companies have changed. Certainly, I've talked to some of the juniors myself, and they're targeting a more institutional focus now with the price going up. So I don't know if you're right or wrong on that. I do know, and I have personally attended the Vancouver Resource Investment Conference, that this was the most widely attended conference in their history in recent years, in the last couple of decades, actually. It was just jam-packed with retail investors. Whether or not they're actually putting money in, I can't confirm, but I will tell you sentiment on the ground is euphoric.
Okay. But institutions, there is more. But it's not like in the old days, it seems to me. There was much more than there is now. And as far as institutions are concerned, central banks, which are institutions, have been buying lots of gold, but it's just them that have been buying gold. The public hasn't been buying gold at all. And mutual funds and things like that haven't been buying these mining stocks really at all either. I mean, they want to stay away from them because they're poison from an ESG, DEI point of view. Everybody knows miners rape the earth and exploit the natives and all these terrible things. And of course, it takes 10 years from the time that if you're lucky enough to find that Easter egg in the middle of nowhere, it takes another 10 years to put it into production, which is when your problems really start. So, no, I think that these mining stocks are, believe it or not, still undervalued. Gold, slightly overvalued. Mining stocks, still very cheap. I think they got a big run in front of them still.
But Doug, I'm just going to show you the chart of gold right now. And this, where my cursor is February 28th. February 26th, February 27th. That's the day of the opening hours of the attack on Iran by U.S. and Israeli forces. Since then, gold's come down. And so the narrative that gold has been a protector of wealth during times of war, so far it's done the exact opposite. Has a price pattern in the last 2 weeks changed your mind on holding gold as a safe haven?
Well, it's run up, it's doubled in the last year. So perhaps it was anticipating exactly what's going on right now. So buy the rumor, sell the fact. Maybe that's what's going on right now. And as I said, it's relatively overpriced at the moment. But look at it within the context of the broader market. Gold as a percentage of people's portfolios is about the lowest level in history. And for that matter, commodities are grossly underpriced relative to financial assets. In fact, it was just last week, I bought a bunch of corn ETFs. So I'm not just looking at gold and silver, but I'm interested in uranium also very much, and coal, which has been a dead duck for a long time, and the grains. The grains are very cheap at this point. In fact, in the cheapest area of the commodities market for what it's worth. And as I said, I bought the corn ETF. I trade futures, but I'm playing this for a long ball. I'm not a trader. I'm a speculator. They're different things. They're not the same thing.
Trader and wait, what do you mean by that? Trader and speculator?
Well, a speculator is someone who looks for distortions in the market and tries to take advantage of distortions, preferably that are cranked in by government action. And there's a lot of that going on today. A trader is somebody that's trying to, in my opinion, trying to second guess the market, meanwhile getting eaten up by daily bid-ask spreads and commissions. And most important, the area between the two ears where you suffer from fear and greed back and forth. So I don't believe in trading. I believe in finding a distorted situation and capitalizing it for a period of months or preferably years.
If you liked this clip, then like the video and share it with your friends. And if you want to watch the entire full-length, long-form video, then check out the link in the description down below.